Hi guys, welcome to my YouTube channel. This is Teacher Party. Please like, subscribe, share. Do what you need to do with the video. Share it with your peers, relatives, friends. We just need to get the distinctions in accounting. So guys, the previous YouTube video I did, it was cash flow from financing activities from the IAB question paper. I did not develop that question paper. I got it from the website. Guys, now I want to look at the government question paper. I need to balance the two systems. We need to look at the government question paper for November 2021. I did not develop it. I did not set it, which I'd like to set those in the future and develop content for question papers. Would suit me. Thank you guys. Now you've got confidence in me. I know some actually bursting into laughter now. Okay, so I just wanted us to look into this question and answer it. Here, they want you to develop the full cash flow statement. If you can see here, they want you to do the full cash flow statement. So remember, I'm just touching base only on cash flow financing activities because you must master small parts in order for you to get distinctions. Remember, I will reiterate. We are here. Here. Okay. Cash flow from financing activities. So it's the proceeds from shares issued, buyback of shares, long-term loans received, long-term loans repaid. And remember, guys, it must be at the cash that was used. All of this, it must be at the cash that was used, not at some accounting entry. It must be at the cash that was used. So if you need these notes, I've got a slide for them. I'm going to put them on my website, and those are available for sale. I sell those. So yeah. Now, we need to get our client name. Our client name is Brewer Ltd. Brewer Ltd. What's their financial year end? 28 February 2021. Oh, guys, this financial period, they love it so much. Ne? First things first. They gave us the values, but there's shares issued here, but they didn't give us the value. I smell X, guys. And then they're saying here 30,000 was repurchased at 120 more than the average share price. So which means we need to calculate the weighted average. These people. Now, shares in issue, exonga solvig. In our case, we exo solvig. Now, we need to do our old note. Shares at the beginning. Shares at the beginning. Of the period. At the beginning of the financial period. And we're given the value, guys. They're worth. We can't record retained earnings, guys. Ngoba, it's accounting entries. It's not necessarily cash entries. Guys, this thing is just being personal. Okay. $30 June. The new shares issued, we don't know. And there's 30. So there's 30,000 shares issued above the share price, above the average price. So now we need to calculate the average price, which is 6.4 divided by 800,000. £8. Okay. Now I just want to check something. Yeah, it's fine. So the shares in issue at the end of the period is, maybe let's do our X method. Equals to 100 shares plus 1,000 minus 30,000 shares. So it's 870 shares. Oh, guys, me, I'm making millions. 800 shares. Okay. The total that we are given here in value is 7 rand. So this can help us to get somewhere. Mm. Okay. Now, guys, that is calculation. This is the second calculation. I like both. Let's move on to the second calculations, honorable compatriots. Ne? So we have this value. Why? Why nothing? I guess. Yeah, much better. We've got this value that is given to us, which is 795. 870 shares. 7395. So it gives us the weighted average of 8 rand 50 per share. Ne? Now we go back to this. Ne? They're selling. So, which is what we will put here, in fact, because we have to, this was at the end of the year, so we have to incorporate everything. Then they're saying shares were repurchased at 120, ne? More than the average share price. So, guys, the reason we're going to use the weighted average at the end, after 1st January, after the share purchase, the shares were repurchased, there was no other transaction. So the balance at 28 February is the same as the one 1st February because there were no movements in shares after the repurchase. So it's 850 plus 120 because they're saying, and this is where they hid a trick, it's 120 more than the average. So which means when they bought it back at a cash price of 8 rand 50 plus 1 rand 20, which is 9 rand 70. So guys, remember I said you're following the cash. So the company actually repurchased these shares at 9 rand 70. Ne? And then show your calculations, guys. Method marks. You know, you'll make it in this metric. If you show, so I think it was 30,000 shares, multiply by 9 rand 70, which is 291. Now we need to find the shares issued. So X ungasolveki, guys, you know. So X equals to 795, ne? Plus 291. Two. It's 12 to 8, 6. Let's see if it's balancing. Let's see if it's balancing. It's 12. Okay. So I just want to check something. So I'm going to try and prove it. It's okay. Okay. So hoping we are correct. Crossing fingers if we are correct. Just repurchase. Proceeds from a new loan. So in fact here we didn't get a new loan, we actually paid. So let me remove this. So we need to show our method. Guys, let's see if we did the things that must be done to make the pot appear. It's always important that you check the memo after you've attempted the question, because then you can see where you struggled. I'm also human, I'm not a robot. So I'm learning together with you. So check it after so that you can see where you missed the mark. Then check it before. Okay, let's see. Our 550 is correct. Our 291 is correct. So our 1250 is not correct. So let's see. Where would I have missed the mark? Oh, okay. So the assumption they have here, and it is the assumption that they have. Let's go back and I show you. The issue price was not given. So meaning the issue price the issue price they used is the one at the end, which is 7,350 divided by. So the shares, they were issued at the weighted average at the end. So meaning instead of us balancing to that, it's gonna throw us off because I didn't do this using the balance sheet method, which has technical accounting entries. I did this using the cash flow method. So the difference here would be, if we are assuming, it's an assumption they didn't tell you. So if we're assuming that the shares were issued at the weighted average at the end of the financial year, so what we need to fix here is the 291 minus, I hope you get me, 30,000 multiplied by 120, because that would be the sales the sales price that they sold using. So it should give us what they have. is 36,000. So 291 minus 36,000 is 255. Okay, maybe let me just show all the steps, guys, so that ningabi lost. There's 6,000. Let's do the whole step, guys. Guys, this thing is so personal. Two, 5. Ne? So 7395 and 6.4 plus 255. There you go. So the shares issued is 12. Okay. So if you're adding this, it's not going to give you this total, ne? Mainly because we had to subtract the 1 Rand 20, because I'm gonna reiterate this. Let's start from scratch and explain it, because I'm hearing many people saying, "Ma'am, I'm lost." So according to the memo, this is your cash flow from financing activities. Now let's rephrase. Ne? Was it 1250? So what's because we paid it's my formulas. Okay, thank you guys. It's my formulas. Sorry about that. So this one we paid, so it's an outflow. This one isn't outflow. This one isn't inflow, guys. Ne? Are we happy about that? Now, I wanted to explain. Okay, we don't need you anymore. We also don't need you anymore. So I wanted to explain this from the beginning, guys. They have not given us the issue price of these shares. So the assumption that is prevalent, if you're not given the issue price for the shares, they don't quote it for you. You have to use the book value, because the shares then would have been issued at the book value. So what is the book value in this case? It is usually it would have been 8 Rand if we're doing the statement of financial position. because it would be 640, 6.4 divided by 800,000, which is 8 rand, ladies and gentlemen. Ne? So, in this case, we need to account for the whole figures, for the total figures that were given, which is the opening balance, and the closing balance and the buyback. Ne? So the buyback, we're also not given the figure, but we're told that it was more of the weighted average capital. So that is an easy attack. We know that it's the total divided by the shares at the end of the year that were issued. Then we get the 850 plus the 120 that we sold at weighted average plus. So we know we've got 970 multiplied by 30, multiplied by 30,000. We have our shares repurchased and we have our shares at the beginning of the period. Now we need to get our shares issued. So now we need to solve for X. So our shares then issued become the figure, the closing balance minus the opening balance. We have to add back the share because we're solving for X. Now we're working backwards. If we minus the share buyback, when we're solving for X, whatever is subtracted, we need to add it back because we're working backwards. Now, because we're assuming that these shares, we issued them at book value because we are not given the issue price, we need to take out the premium that we bought back with, which is the 1 rand 20, and leave the book value. So that's how you got this calculation. So my email address is memoparties@gmail.com. My cell phone number is 0818339231. If you still struggle with this question, do highlight me. I don't mind. So share repurchases, we always have to put them as a minus because it's an outflow. Proceeds from a new loan, we put them as a plus because we're getting money in, it's an inflow. Repayment of a loan, it's an outflow we're paying. Proceeds on share issues, you know the drill. Then inflow, we're getting the money in. Goodbye, guys. Share, like, subscribe. Invite your friends to do the same thing you did, which is sharing, subscribing. Let's keep the message spreading. Bye.